Hello everybody, welcome to this week's live stream. I hope everything is working okay for you there. I think there's a slight lag, I think, compared to what I'm saying and you actually seeing it, but hopefully the sound's all okay. We'll get into it in a second. I thought we'd have a look, start off first of all, the US dollar, the dollar index. I mentioned this a few times when we look at markets. Big fan of the US dollar index as a market to watch and trade. Some great trends. We'll have a look in more detail in a second. But today it has pushed out to its best levels since May 2020. So what's that? 22-month highs, 23-month highs for the dollar index today. So really interesting one to watch, I think, next week. But we'll take a look in a second. So just to explain what this is, we do this every Friday, and it is a quick catch-up with the major markets, what's been moving over the week. Clearly at the moment, still plenty. And a look ahead to the events to watch for next week. So I'll go through the major markets in a second on the trading platform. Then if there's any markets you want looking at, if you put that in the chat, then we'll take a look when we've done through all the normal markets. Let's just do the risk warning first. It's important to understand this presentation is only for educational purposes, and it does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for a transaction in any financial instrument. David Jones and Capital accept no responsibility for any use that may be made of these comments and for any consequences as a result. Spread bets and CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. 78.79% of retail investor accounts lose money when spread betting and or trading CFDs with this provider. You should consider whether you understand how spread bets and CFDs work and whether you can afford to take the high risk of losing your money. Right. Next week, big week for inflation. Next week. So Monday, early hours of Monday morning, we get China inflation numbers. Not early hours. Tuesday, we get the US inflation numbers. Wednesday, we get the UK inflation numbers. I mean, clearly, we came into this year and inflation was the big theme. And then, of course, we had, the Russian invasion of Ukraine. So that has dominated markets over the last, 5 or 6 weeks or so. But inflation is still out there, obviously. It'd be interesting to see what these inflation numbers look like. I still think, I think I said it last year as well, I don't think inflation is going to be temporary. If you're looking, look at how commodities have risen. Oil, obviously, we know about. And then we look at soft commodities, the agricultural commodities. Everything's been going up for a couple of years now. So I do think this inflation issue is going to be a real problem for some time. Be interesting to see, how the rest of the year pans out and how effective interest rate rises are in trying to cap inflation. And then talking of interest rates, Thursday, we've got the European interest rate decision. I'm not quite sure if they're going to raise or not. I think they're not going to raise. I'm not sure, actually. I must admit, I've not been following that. Let's see, though. So an absolute stack of stuff happening next week. Of course, next Friday is it Good Friday next Friday? Is it Easter? If it's Easter next Friday, we won't be doing a live stream. So if it is Easter, isn't it? So I think it's a short week, isn't it? So there'll be no live stream next Friday. But anyway, let's get into it. So as usual, contact details. I do this with Capital.com. Just go to Capital.com to open an account, download the app, try the demo, all the usual stuff. Any questions after this, drop me an email, david.jones@capital.com. On Twitter, I'm @JonesTheMarkets, and you can find out more about me at jonesthemarkets.com, and follow Capital.com on YouTube, Twitter, and Facebook. Right, let's get into it. I am going to start with the dollar index. I always say this is a great market to watch. It was a great market for me to trade in, I think it's like 2018, 2019, because we had a good trend. I think I can remember at one of the very first live streams we did last year, 2021. And I said, is this going to be the year we see the great dollar turnaround? And I'd done my first trade for the year on the dollar in January of last year. I mean, it did take like 3 or 4 months until it finally started moving. But since then, since May of last year, it's been a great trend. It's only a 12-month, 10-month trend, isn't it? I think I was adding on an extra year when I was talking about it in the beginning. So yeah, great trend in the dollar index. Further dollar strength. That is clearly going to weigh on stuff like gold and not gold. Yeah, well, actually gold, but the pound and the euro. We'll take a look at those in a sec. And of course, the price of gold. If the dollar's going up, traditionally the price of gold would be under some pressure. But we'll take a look at those markets as well. So I've been long at various bits up here. I actually did add yesterday. Don't follow that as a trade because it can always go wrong. But I did add to my position yesterday on the breakout. I think later on yesterday I had an order to buy the breakout. So let's see. But still pretty bullish the US dollar. I've just seen a question come in. Do you actually trade the DXY, which is the dollar index, or do you look for dollar pairs with a better spread? I trade the DXY. I mean, I do trade other stuff as well. I've got a trade on Aussie Dollar, US dollar at the moment. I was long, and I probably will be coming out of that because it's come off a lot the last few days. But I absolutely will trade the dollar index just on its own, and I do really enjoy trading it. I think it's got just some great trends because it's the dollar against a basket, isn't it? The euro, the Swiss franc, the pound, and a few others, the yen. So I think maybe it's a slightly smoother market to trade. I don't know, but I like it, and it's always, for me, it's been a good market the last 4 years. I mean, obviously not every trade is a winner, but I do like it from a trend point of view. Look at that. That's almost a textbook trend, isn't it? Since May last year. Second touch, third touch near enough, fourth touch, fifth touch. Clearly, it's pulled away a lot from that trend at the moment. But for me, it's definitely a market I always look at every couple of days to see what's going on. So that's the dollar. As we're on the old currencies, take a look at pound against the dollar. I mean, there's a good trend, pound against dollar. It's still weak, isn't it? And it's even as we speak, because of course the US dollar is at a 10-month high. We're seeing the pound pushing to new lows for that downtrend. So at the moment, with the pound at 130, it's trading where it was in November 2020. So that is a 15-month low or something for pound against the dollar. And I said I was looking for opportunities to sell short this, and I was hoping for a rally, perhaps back up to 134. Never came, so I don't have any trades on the pound against the dollar. I think I missed the opportunity here back in Feb. To be honest, for my style of trading, looking for the biggest swing. But for me, it's still weak. There's a lot of support, pretty major support. About 300 points lower than where we are now. So I think it is interesting, sort of 127 to 128, what happens. But for me, even if we got a good rally in the pound, I'd still be looking to be a seller at the moment because that trend is most definitely down. And euro dollar, euro dollar, the euro against the dollar. I did wonder, I mean, I suppose it is still valid, are we going to see this thing try and make a base down here? Saying that, if we plonk our trend on, from last year, the trend is still down on euro against the dollar. But again, we've got really significant support coming in from 106.40, so a couple of hundred points below where we are now, to 108. So whilst it's still weak at the moment, I think it could be an interesting 3 months for the euro against the dollar. Do we finally see the euro's fortunes start to change? They're not changing at the moment. It's a market that's still weak. I'd still be looking to sell a rally if it rallied up to 112 from here, like a 400-point move. I think that'd be a good short. But at the moment, it's still pretty weak. It'd be interesting to see if that low holds, that low from the 7th of March. 108 near enough. It's about 30 points above it at the moment. So, French elections. Thanks, Richard. Yeah, there's the French elections going on at the moment, isn't there? So again, that could, I suppose if we had a surprise there, that could have an impact, at least in the short term, because of the French elections on the euro. So let's see what happens. But overall, still pretty weak. Let's see what happens at 108. But the dollar remains dominant. So as we're looking at currencies and stuff, let's take a look at gold. I did a video on gold this week. I think it was yesterday, wasn't it? Yesterday's video, where we looked at gold in a bit more detail. And it's always an interesting one. I know it's a really popular one, gold. And in the video yesterday, I basically said I think it's boring again. gold. You know, one of my big complaints, not complaints, but last year, whenever we look at gold last year, it was pretty dull. You know, 2021 for gold. It was down 3.5% for the year overall, you know, when everything else was booming away. So yesterday's video, I did leave an order to buy gold. So I'm still bullish on gold, but I'd left an order at 1890, so just below the 1900 level. Because we've seen pretty scrappy trading for the gold price over the last 3 weeks or so. You know, we do have a trend, so I'd still be a buyer on dips of gold. You know, we've still got a trend going on for gold. But I wonder if it ends up being some time before we see those highs from March threatened. You know, I think it's quite interesting that if you look at the reaction of some markets because of the Russian invasion of Ukraine, you know, gold ran up pretty close, within $5 or so of the old all-time high, but couldn't break it, and it's come right back down again, you know, to almost where it was when the invasion started. So yeah, I can't quite, you know, apart from a massive escalation in aggression, I can't personally see massive upside at the moment. I'd still be a buyer on dips. I think the risk is we're going to have perhaps a boring few weeks for gold. Famous last words. Let's see what happens. So it's not, for me, it's not a particularly interesting market at the moment, but was of course very interesting in the first 3 months of the year. Silver, I mean, silver does get the prize from me for the most boring market around last year. You know, trades at a wide range, doesn't really go anywhere, and there's nothing that changes that for me. You know, we've got support. You know, whenever the thing dips below 22, from a longer term point of view, the buyers come back out, and then it can't hold for long above 28. So for me, it's you know, pretty range bound market. I don't even know what I do at the moment on silver. You know, the trend since early March from $27 is still down. I suppose if you absolutely had to do a trade on silver, there's an argument for being a buyer, and I'd put my stop the other side of this sort of quite aggressive sell-off low, the other side of 23.90. But I don't, you know, I just find them pretty boring markets at the moment, to be honest. You know, continuing, you know, what we saw last year. So nothing really too exciting for me in that one. So that's gold and silver. Let's do oil and natural gas. Natural gas has had a right move on, to put it technically, over the last couple of weeks. Oil's interesting though. We've done a video that's going up on the site, on the channel next week, an oil explainer video. Why is oil so volatile? And clearly we've seen exceptional volatility over the last month. But I think it's really interesting, again, sort of tying in a bit with that gold thing, that gold's back to where it was when the Russian invasion started. You know, oil, this is West Texas, is below $100 a barrel again. So again, you know, ran up to 126, I think, cash price of West Texas, beginning of March, and now we're trading at 95. So with $30 lower, what's that? 25%. It's dropped 25% since those March highs. From a short-term trade point of view, I suppose there's an argument to be a buyer of oil, isn't there? You know, we've seen this sort of whole, I don't know, if we took it off these levels here, $92 has been a good floor, was a good floor a couple of weeks ago. And we saw a bit of a, you know, good run up to 116, and here we are back down again. I do think like gold, you know, that, you know, we've clearly massive volatility in March. I wonder if we just have some quiet trading now, you know, a bit of consolidation and all of that. You know, the trend is still definitely up. That's the trend off the April lows, the 2020 lows. So we're 2 years into that rally, or that recovery, whatever you want to call it. So the trend's still up. Still be a buyer on dips, but I wonder if we'll see a bit of a quieter time for crude oil at the moment. Now, natural gas. We did a video on natural gas beginning of the week, and the biggest winners at the moment, the trades I've got open, here they are. Natural gas did one trade, 13th of December, That's up £760. I did another trade 19th of June, and that's up 670. They're really good trades, though. It's not just because they're in profit, but you know the risk was $250 per £250 a trade, and you know they've made a multiple of the risk. So they've worked well, those trades. So 13th of December and 19th of Jan. So they were done before the Russian invasion, and so the 19th of Jan trade would have been in about here. And it was just because the trend, natural gas was another good market for me last year in my own trading. The year before, it wasn't. If I bought it, it would go down. If I sold it, it would go up. You know, but last year, we had a really good trend in natural gas, actually, which started in the summer of 2020. So that's where we are, and that trend really accelerated from April. And it's interesting. I think this is, along with the dollar index, I think this is perhaps one of the most interesting markets for today, because we are, even as we speak, probing through that high from last year, from October last year. I mean, natural gas is a pretty volatile market. I mean, it hit these highs in October, up around, let's call it 650, and then it dropped down to 350 by December. You know, so it dropped, what's that, 40% in the space of a couple of months. So me personally, I probably wouldn't do anything yet, but I think it will be interesting to see, do we see it next week, natural gas, start to push out further through these old highs, or actually do we see some nerves starting to creep in? So I suppose if you really wanted to go short natural gas, it's a good level to go short if it starts to run out of steam up here, but it has had a great run since Feb. So I'm still long on those two trades in this account. I don't have any trades open in my own account on natural gas, and I'm just trailed the stop loss up behind it, and we'll see how it turns out. But yeah, I mean, you know, really strong run when oil has gone a bit quiet in the last couple of weeks. You know, and some of the things driving natural gas is the potential EU ban on buying gas from Russia. This is US natural gas we're looking at here, so it would mean more imports from the US of natural gas. It's been colder. It's very much a weather-driven market. It's been colder in the US than expected, and that always lifts it. But I think it is mainly perhaps this EU ban. Let's see what happens. So I think it's a really interesting market to watch next week. If we take it right back, I mean, this is a big hurdle. We go back to 2014. The highs back then were about 670, right? So where we are now in natural gas, 650 to 670, has been a real problem over the last 8 years or so. So yeah, interesting one to watch next week, that one. So that and dollar index are my two, for me, the two more interesting markets at the moment. Let's take a look at stock market indices. S&P. I think this is quite confusing at the moment, I would suggest. Well, for me, anyway. Maybe not for you. I think the jury is still out as to, have we seen the lows for the year? Okay, so it is, you know, we saw the market sell off really heavily into January, rallies. Then, of course, Russia invades Ukraine. This was the day it happened. So the market traded much lower. The S&P index traded much lower in the overnight market and then recovered. And we haven't taken out that low since. So the low on invasion day hasn't been taken out. And the market has rallied quite strongly. And then it has actually been hit quite hard this week. So we've got pretty volatile market, I think, in stock market indices at the moment. Difficult one to call which way medium term. So I've not done that much with the S&P. You know, I did a lot with it over the last couple of years because, of course, we had such great trends. But I think for me, again, it's a tricky one. No, what am I talking? I went short. I've got a short on the S&P. That's what I was going to say. I forgot about that. I went short a week and a half ago on the S&P, and I thought I'm going to have to mention it in the live stream because it's the first time I've been short the S&P in years from a medium-term trade. And the reason I did it, so I did it on the way up. So the market was rallying like this, up here. So I went short, I think it was here actually, towards the end of March, with a stop loss up here somewhere. So the market did push higher and it's rolled over a bit. So in the short term, my view was this rally has gone too far and the market's going to roll over again. But I don't think we're going to make new lows. So again, with the S&P, I do wonder if we have just a bit of a wide, rangy market for a while from here. I don't know, but we'll see. But it's definitely, for me, it's a lot harder to trade it now than it has been when it's just plonking away higher in its uptrend as we had, just buy the dips. Much harder market to trade now. Interesting, but if someone said, where's it going to be in 3 months? I think you can make the arguments for it being 10% higher or 10% lower from here. And I just think investors are perhaps sitting it out and waiting to see for a bit more direction. Same with the NASDAQ. I think there is a short NASDAQ trade in this account. Here we go, short NASDAQ trade from the 30th of March. So that ended up being quite a good trade. So that's up 460 so far for 250 risk. So where was that done? 15,160 on the 30th of March. Let's have a look at that. But the NASDAQ, I think, is another one that it's still quite confusing at the moment. So 15,160. Actually, I was selling it on the way up, wasn't it? So it would have been, here, yeah. So I did it. So actually, that was a bit of a fluke that I did that trade pretty much the day after the top in the NASDAQ. So that was a bit of a fluke there. But that's worked well. And again, quite weak today. It's the NASDAQ this week has gone from sort of 15,200 at the high to trade at 14,350 today. We're still, if you take it out, it doesn't look like that big a move, but actually in point terms, we're still seeing some quite big swings. So another, I think, quite confusing market at the moment. I'd be quite tempted to watch this today and see, do we get a bit of a bounce back off yesterday's low? We're almost on yesterday's low anyway. So I think for me, if we were going to short-term trade it, it could be an inch. Maybe we'll do a trade a bit later today, but 14.2, the 21st of March lows, to 14.3. Do we see perhaps some buyers come back in? It wouldn't surprise me. Let's see what happens. But I think indices, very difficult markets to call. Lots of volatility. Don't really know where they're going to go over the next few weeks. If we take a look at some of the other markets, look at the Ftse. And the Ftse's done well. The pound weakness will be helping the Ftse. Here we go. The Ftse's up today, I think, slightly. The pound weakness will be helping the Ftse at the moment. So the Ftse is always a bit of an odd index. Much more defensive makeup of stocks than the S&P, obviously. And you can see, has for the year so far, the Ftse is actually up. So the Ftse is up for the year. Everything else is down. Well, not everything else, but S&P and NASDAQ are down. Because it's got a much more defensive mix, because so many of the Ftse 100 companies derive their earnings from overseas. A weak pound, helps their profits. So a weaker pound would also lift the Ftse. And here we are, within 70 points or so of the highs, 7,700 highs, near enough, from Feb last year. That was a great buy. The Harry Hindsight trade, beginning in March, 800 points in that trade. Big level. He's absolutely 6,800, big level for the Ftse. Let's see what happens. I think if US stock markets continue to fall, I'd struggle to see the Ftse continue to defy gravity. I think maybe the risk is for it to roll over. But another interesting one to watch next week to see what happens as it nudges back towards this old high. Let's see. DAX. To me, it looks a little bit similar to the S&P in a way. Like, is this a dead cat bounce or is it the start of a recovery? Interesting, it pushed back up to the old support and it's fallen. I don't know. I think there are arguments for being a buyer or a seller on something like the DAX at the moment. If it pushed back up towards 14.8, I'd be thinking about selling short if we've got that opportunity again. But let's see what happens. I think they're hard to call, stock market indices at the moment. And the Nikkei, actually, we do have a short on the Nikkei because we did it in the live stream. So I did a short on the Nikkei, the 25th of March live stream. There you go, at 20 to 3 in the afternoon. So went short at 28,250. And the market has moved 1,200 points in our favour. It was good, that. The risk was 100 quid, so the trade's up 120 quid. Let's move the stop loss. Let's move the stop to break even, because I always forget to move stops on these things. But let's take a look at the Nikkei anyway. Let's have a look at that. Nikkei 225, there we go. And we did it, I think we did it because it was this textbook downtrend. Where was the 25th of March? It was, just here, red here, on this little red candle. So we did it then. And the market has, the trend has been down, blah, 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 the usual. Going with that trend that had been in place since September of 2021. So for me, I'm short at the moment. I'm quite happy just to sit with that short and see if it does it pull back to those early March lows. Let's see what happens. But so for me, the Nikkei still looks pretty weak to me. And that's it, isn't it? It's all the stocks. Have a look at the world of crypto. I've got my Bitcoin trade on. I did say, didn't I, a few weeks ago? I think I should have moved the stop on that. Didn't move it. Bought it at 39.6. I'd still be a buyer of dips, I think. The reason for me buying was I think this correction's over. It is over. I think it is well and truly over. The correction from the highs. I think it is trying to build a bit of a recovery. So if it dipped below 40,000, I'd be a buyer. So a bit boring, you could say, Bitcoin and the world of crypto in recent months. But it does feel like it's trying to build a gradual recovery. I think if anyone's waiting for those old highs to be hit, I think they can have a long old wait, personally. But let's see. Let's see what happens. So still mildly positive, I think, the old crazy crypto. And Ethereum, which I'm guessing is going to look pretty similar. Yeah. Actually, it's had a better run than Bitcoin, hasn't it? But again, end of the correction, holds above the old lows, blah, 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 off we go. I'd be a buyer of dips on Ethereum. I don't know what I'd do now. I'd rather it dipped a bit further before being a buyer. But let's see. So that's all that. That's all the stuff done, I think. So we'll jump into some of the questions now. So for me, markets to watch. Not as many as usual for me. Dollar index, because we are at this highest levels since May 2020. So that's quite interesting to watch next week. Natural gas, because I never thought natural gas would get back to those old highs so quickly. But here we are, back up at these old highs for natural gas. So I think that's interesting. They're the two interesting ones, I think. And next week we have all that inflation data coming out. So I think it's gonna be potentially a really volatile week next week. Let's have a quick look at that Nasdaq, see if that level's holding. Should we do a trade? Let's do a trade. Come on, let's do our Friday afternoon trade. So what I'm going to do is flip it over to an hourly chart. So it has been a bit all over the place. I should really still say the trend for April is still down, but I'm going to have a little bit of a punt on it holding above 14.2 to 14.3. Oh, actually, I've got that short Nasdaq. It's going to close me out of some of my short, isn't it? Shall I close the short? Hang on a second. Where's the short? No, I'll stick with the short. Let's do a trade on the S&P, because it must be doing something similar. So, okay, here we go. We'll do a trade in the S&P. So the S&P, actually this is probably the better trade on the hourly charts. Hit a low on Wednesday of 44.52. Hit the same low yesterday, 44.51, and we're now at 44.79. So I'm going to be a buyer of the S&P. I'm taking 44.50 as an important level, so I'll go 44.40. 44.40 for a stop, 44.40 for a stop. We normally risk 100 quid, so if I buy 3.3, there we go, my risk is 100 quid. Stop at 44.40, see that on the chart, go. Done. Let's see, where do we buy it? 44.80.7. Let's see how that works out. We'll have a quick look at that before we finish today. Right, let's get into it. Let's have a look at the questions. Natural gas, we looked at that. We looked at crude oil, just chop, I think, in crude oil. What's your maximum account risk? I mean, number of open trades. I will quite happily, so in my own account operates from a risk point of view, not massively dissimilar to this account. So this account, if this is the first time you're watching these videos, this account has real money in. It's been running for about 2.5 years now, and it's Capital's money. So it started off with 10 grand, and at the moment it's been built up to 18.7 is where it is now. And there's always quite a few trades running, with stop losses on. In my own trading, I probably the most at the moment. I've only got about 7 trades open in my own account. At the peak last year, I had, I think, about 25 open positions on different markets. So I trade a whole host of things. So that was the absolute peak last year. 25 open positions. I practice sensible risk management. I never risk more than 2% of my account balance on any one trade, which is why, if you watched, any of the videos that we do, the pre-recorded videos on the channel, my account risk on every trade is £250, which as a percentage of the account balance is really small. The mistake people make is they have far too big a risk. If your account is £1,000, for example, and you do a trade on the Nasdaq, that means if it goes wrong, you lose £200. You're trading far too big. You're crazy, in my opinion. If you're £1,000 account and you risk losing 250 quid on a trade, you're crazy. So for me, quite happy to have lots of positions, small risk on those positions though. So I hope that answers that question. So I don't think so much about a maximum number of open trades. I do think about my risk. And I'll quite happily add to open positions as well if the market's moving in my favour and it's moved to a certain point. Like the dollar index trade I did yesterday, I already had a dollar index trade open and I've added to that position. And there's a bit more on the website, on the trading course I do, jonesthemarkets.com. I explain a lot more about that on the course. So I'm really, for me, risk management is the most important part of trading. And people don't like paying attention to it because they're in denial. But if you don't pay attention to it, I think you learn a lesson very quickly as to why risk management is so important. Okay, good question. Could you explain when to take profits? For me, I never just decide, oh, that's it, I'm going to come out of the trade. I always just move a stop loss up. Yeah, so if the market's trending, let's go back to the old dollar index. So the trade I've got on the dollar index now, I can't remember when I put the trade on. Let's pretend, if I go to a daily chart, it might jog my memory, but let's pretend I put the trade on here in the first trade. No, actually, no, it was older than that because that's only February. Let's pretend I put the trade on in December at 96. For me, I'm still in that initial trade and I've added to the trade yesterday. And I just drag the stop loss up behind, yeah? So it does mean that I'll end up giving back profits because I'm never going to get out at the top when I'm long. But it also means I can ride really good trends as well, So, and that for me, that is the basis of my approach is to try and catch some big trends. Like last year in natural gas, if you catch a trend where you're making 2 to 3 times your risk on a trade, so if your risk is 250 and you're making 500, 750 or 750 on a trade, that's the way to trade. So even if I'm wrong half the time, if I get a few big winners like that, I should still be up overall for the year. So I don't just decide, okay, the market's gone too far, it's time to come out. I let the market take me out. What's your opinion on copper and coffee? Those are 2 of my other trades at the moment. Copper, I've been in this trade for ages and I still think the trend is up. And we had a little bit of excitement in early March and it's sort of fallen back to be boring again, hasn't it? But the trend is still up. So I think I've been in this trade since about July or something last year, or August, a long time anyway. And it's slightly in profit. But it's just a bit boring, isn't it? But the trend is up. So for me, as a trend follower, if the trend is up, I've got to be a buyer. So I'm sticking with it personally. I'd still be a buyer on dips on copper. I think only if it starts falling below 430 to 440, would I get out of it? So overall, bit dull, but that trend is still up. So who am I to argue with the trend? And coffee, you said, didn't you? This is my worst performer at the moment, coffee. It had been a good year last year, because of trends again. So I know absolutely nothing about coffee. I couldn't tell you, whether it grows on trees or does it grow in the ground or when the crops are due, any of that stuff. Let's leave that to the farmers. But for me, a great trend, really, really good trend. Going back to, we could go back almost to here, 2019 for coffee, for that trend starting. I've picked it up here from November 2020, accelerated last year. So I did well on the way up. The latest trade I'm in, I think I put the trade on about here in December. So it has flipped to being in profit, it's flipped to being in loss, and it's about break even. If I had to do a trade now, I'd be a buyer. So if I was a buyer now at 230, I would put my stop loss to the side of 210. So I think it's bullish, but it has lost, I feel quite a lot of momentum this year. But that trend is still up. So I'm still long coffee. The trade's not doing much for me, but overall I think it's still positive. While we're on the subject of coffee, let me show you sugar. I missed this as well. This was another great market. We've only got, hang on, no, that'll do. Sugar, this is UK sugar, but great. This is why, again, this all feeds back into why I think inflation isn't going to go away anytime soon, because everything's going up. Look at sugar. So sugar is at its highest level pretty much since 2017. So great trend again there. These agricultural commodities have had really good trends. And I saw someone mention cotton, so we'll have a look. We'll have a look at cotton. Hold on a sec. Same for cotton. Look at it. See, and this is all this stuff that we use every day has just been going up in price for years and years and years, and shows no signs of changing. So again, for me, I'd be a buyer of a dip on cotton. I'd quite like to have a big dip, but that trend is up. So for me, the closest I'd want my stop, probably the other side of the March lows, which is a bit of a distance at the moment. But I think it's another interesting one to watch next week, cotton. So there we go. US Bank Core. Let's have a look. So we're doing individual stock. US Bank Core. There we go. A little bit boring is what I'm going to say there. Little bit boring. Arguably, if you wanted to be really aggressive, you could be a buyer. You could take the view. It's quite an aggressive trade, but I think it could be an interesting one. You could take the view, it's been in this sideways range since April. 12 months it's been in this sideways range. And it's recently, over the last few days, fallen out of the range. So if an aggressive trade here would be to take the view the market is overshot to the downside and be a buyer and put a stop loss at, $49 and treat it as a false breakout. But I think if it trades much below 50, it does look like that perhaps it's starting a new trend. So it's interesting because it's maybe at the start of a new trend, or it's maybe going to pull back into the zone, but no sort of good medium-term trend on that one. Renault, a quick short on Renault. Let's have a look. It's tricky though, isn't it? It's because it's fallen a lot, hasn't it? But so you're saying because of the uncertainty about the old the French elections. Do you know what? I would be a buyer of Renault. Wouldn't buy any of their cars, obviously. Hang on a second, because you'd argue the trend is down, but they do own Alpine, don't they? And they make some nice cars. I think the trend has been down. I think clearly it's broken off that trend line a long time ago. I think it's interesting where it's got knocked back to. It was big support, this level, about €20. So actually, I would have to disagree with you there, and I'd actually let's do it. Let's be a buyer. Let's be a buyer of Renault. So what's the level? $20. Let's see if we can hold above 20. So we'll go. Let's go. Oh, I don't know. $18 for a stop loss. Let's put the stop loss in at 18. And figure, 18, not dollars, it's euros, isn't it, you fool? €18 for a stop. How many do you use I need to do the maths in my head. Can't do the maths. Buy 30, let's buy 31. So buy 31 at 21 euros 87. Stop loss at 18. Risk is 100. Let's go. Let's do that. And I think it's interesting because it's been knocked back pretty brutally. I don't know. Is it all down to supply chain stuff? Because we know, the car industry is having an awful time, isn't it? Trying to get stuff for a while now, chips. And I think I read that Porsche was cutting down loads of its production because some wiring looms come from Ukraine. So I don't know if this is all supply chain stuff that's knocked the share price. Whatever. It's quite interesting down here, Renault. Let's see what happens. We'll come back to it if I remember the next time we do a live stream. Let's see what happens. Okay, did Renault. Wells Fargo. I bet Wells Fargo is going to look a little bit like that US Bank Corp thing. Yeah, a little bit better actually. I'd be a buyer. There we go. So we did have good trend. Trends ran out of steam a bit, a little bit sideways, a little bit messy, but good support still from sort of 44 to about 46. So for me, if I had to do anything, I'd be a buyer, and I'd put my stop loss to the other side of 44. Bit sideways, but considering how markets have been this year, it's not done too badly if you did it versus the S&P so far this year. Dollar yen, let's have a look at dollar yen. I'm guessing dollar yen is soaring away at the moment. Let's have a look. It's going up anyway. It's not taken out that high yet. Dollar yen, the trend is up. The problem I have in a market like this, it's pulled, again, if we put our time traveling hats on, it'd be great to go back and have bought it in here somewhere, down at 114. And now we're 1,000 points higher. Where would your stop loss go? I don't know. So for me, the trend is up. I'd much rather buy a dip. The risk is if you wait for a dip, the dip never happens. Let's see what happens next week if it can break 125 properly and see. Where will that put it then historically? Have we got the data? Let's have a look. Oh, we've only got data going back to there. Let me have a look on something else. Hold on a second. I'm just a bit curious. If it breaks through 125 from a historical point of view, where does that put dollar yen? Hold on a second. Drag that over and have a look on here. So we would put it, it's a big level actually, isn't it? Look at this. This is it's the highs from 2015, pretty much. 125, 126. It's a big level for dollar yen. So interesting to see next week if it can break that. If it breaks that, we're back to 2002 levels, 20-year highs in dollar yen. If it breaks that. Interesting. Let's see next week. Barclays has fallen. Barclays has fallen. Let's have a look at Barclays. Barclays, there we go. Where would you put a stop for a long position? I suppose, I wouldn't, maybe I would. It's an aggressive buy, I think, now, because it has really been hit hard, hasn't it? It's gone from, £2.20 to 140. It's a 30% plus fall, isn't it? Big fall. And for me, I would put my stop under £1.30. So the old lows from actually more than a year ago, from January 2020. So it's interesting that. See if it makes a bit of a comeback. It is an interesting one. Let's come back to it and see how it does. Can you do Aussie Dollar? Yes, I've got a trade on Aussie Dollar at the moment. And I've given back quite a bit of profit this week. I thought it was really going to get a move on, the Aussie dollar, because it did that on Monday. And I thought, here we go, it's breaking out, and it hasn't. So I've given back profit. I've got a fairly tight stop. I'd still be a buyer on dips though, I think. I wouldn't be a buyer today. Interesting if you see a bit of strength come back in next week. Clearly with this stronger US dollar today, that has put the Aussie under pressure. But I think it's an interesting market. Really just watching the trend from early Feb, if we take that out. So something like this for me, like that, there we go. So it's an interesting one to watch next week to see if we see the strength come back in. Cotton, we looked at cotton, didn't we? Prudential. Insurance company, aren't they? Yes. I think I looked at this week for my ISA because the yield was good. It came up, but I don't think I liked it because the trend has turned around a bit, hasn't it? I think for me, I wouldn't be a buyer, but then no one's got a crystal ball, obviously. We did have a trend in Prudential up until November last year. I think we've broken some major levels. So for me, it's an interesting one to watch, I think. And is it, it's not quite turning around that new downtrend for me. But if I could actually talk, if I absolutely had to buy it now, the closest I would put my stop would be the other side of the March low. So the other side of £9.70, perhaps even a bit further. So I think it's interesting. It's been hit quite hard though, hasn't it? Just since November. But an interesting one to watch. But for me, no urgency to do anything. Twitter. Let's have a look at Twitter. We did a video on Twitter this week. I went short Twitter. Hang on a second. Let's see. Where's the trade? I went short Twitter in the video. Oh, that's done really well. That's really collapsed. I did that on, when did I do that? Tuesday. I did that video on Tuesday. Went short Twitter at $50.50. Okay, let's have a look at Twitter. I went short in the video we did because I just took the view that the exuberance of Elon Musk taking a 9.2% stake in Twitter, that maybe it was overdone. That's the reason I went short. So we had this move here when the news broke. Was it Monday? The news broke about Musk buying a chunk of Twitter, and I did the video on Tuesday. So I went short here. The market did push a bit higher, but yeah, I just think it will. I think it'll be an interesting one to watch. But I think moves like that are always interesting trading opportunities, and so far this one's worked out okay. I think the risk is it'll just drift back to 40. Let's see. Let's see what happens. Whether Mr. Musk, turns around Twitter. Long-term gold thoughts, next 3 years? Oh, no idea. Absolutely no idea. I'd probably say higher, because the trend is up. The big trend for gold is still up. But I don't see, I'd rather have my money probably in stocks than gold, even given the volatility we've had in stock markets. I'm not one of these people who thinks gold's going to be like $25,000 an ounce or anything like that. Euro Ruble, in your opinion, how the potential embargo on Russian natural gas? Don't know. We'll have a look at Euro Ruble, but because it was interesting yesterday, dollar ruble, I hadn't looked at it, and it came all the way back, as has Euro Ruble. Here we go. So here we had, of course, Euro strength on the sanctions news, and it's come all the way back. And more, actually. I mean, for me, it's a crazy market, isn't it? Currency pair that halves in value in a month is a bit of a crazy old market to try and trade. So it's probably not one for me, and I don't really know how the sanctions are going to impact it. For me, these markets are a bit too crazy, and I just would personally wait for everything to settle down a bit. So I don't really have much to add to that. Could we take a look at sterling Aussie? Yeah, sterling against the Aussie dollar. Got no idea what this is going to look like. Let's have a look. So what we're seeing here, pound weakness. What would you do? It does look pretty weak, doesn't it? I would probably sell. I would sell the pound against the Aussie dollar. Actually, I would do. We've broken this big support from last year. Oh, hang on a second. But we only spent a day below it, don't we? So I think, okay, there's an argument here for going short or going long. And of course, this is what makes a market. Because if everyone thought the same thing, markets would just go in one direction, wouldn't they? You could take the view. Let's say you had an aggressive view on the pound against the Aussie dollar. You could take the view here, right, this break is a false break. So you'd be a buyer. Be a buyer at 174.84. And I'd put a stop the other side of that low and see if the market pulls back. The other way of looking at it is the trend has been down over the last couple of months, so I'm going to sell a rally. Yeah, so I think it's an interesting one and not one I've got a fixed opinion on at the moment. Yeah, let's see. Let's come back to it. Do you pay attention on maintenance margin and how much percentage you risk in comparison with available equity? So for me, if I use this account as an example, so the account is £18,000 and a bit, and there's 4,300 tied up in margin. In my own account, I will happily use about 70% of the money in my account as margin. When I'm trading lots of positions at the moment, the margin in my own account is relatively small, the margin requirement. But so if this was my own account, I would happily run it up to about £13,000 in margin, so 3 times the amount of margin I've got now. And again, that's all just part of risk management. So yeah. Hang on a second, what's going on here? What time is it? I think we're going to have to get a little bit of a move on because I'm running out of time. So I have to skip over a few. We looked at dollar yen, we looked at Ftse, we looked at Nasdaq, Halliburton, what do they do? It's a bit of everything really, isn't it, Halliburton? Yeah, multinational for energy, of course it's energy. Doing well, aren't they? As you'd expect. I mean, they were doing well anyway since March of last year. Gone from what, $4.60 to $39 today. Good run. Again, for me, it's always a difficult one when they've been as strong as this, is to think, well, where would my stop loss go? I'd much rather buy a dip. The risk is you wait for a dip that never happens. So for me, I'd be looking for buying opportunities on Halliburton. So yeah, if I was a buyer now, probably the closest I'd have my stop, the other side of 32.50, personally. So let's see. We've looked at pound against the dollar. National Grid. I've got shares in these in my ISA, so I do know what they look like. National Grid. They've done well. National Grid. Good dividend yield as well. Look at that. So yeah, so I hold them. So bear that in mind. But yeah, the trend has been up. I've held them for a while, I think. But the trend, is undoubtedly up in National Grid. It's punched out through these old highs. It did that at the end of last year. That was a bullish sign, punching through £10.70. It's arguably a bit overextended in the short term, so I'd be a bit wary of a pullback in National Grid. But if it dipped back to £11, so about 10% lower than where it is now, I'd absolutely be a buyer. But can't argue with the trend in National Grid. So yeah, interesting stock. That one. What's this? Someone keeps talking about some share called Bingo. Is it Bingo? BNGO. Bio-nano-genomics. For me, I mean, I don't. For me, the trend is down. So you say you bought at $8 per share. I mean, okay. It's tough. The thing has dropped a lot. For me, the trend is still down. The risk is it's going to go lower. Clearly it's your money. You need to decide, what you want to do. But I think, it's awful, to sit there and sit on an open loss like that. And I think it does remind us all the importance, even as an investor, to have stop losses. Stop losses aren't just for trading; they're for investing as well. But I suppose let's see. Is it going to try and make a base above $1.50? It's only been on the market since June of last year, and it's just gone down pretty much since it hit the market. So, it's been pretty weak. But good luck, whatever you decide with that. Okay, I think that's it. Someone said BAE Systems, so the defence, the UK defence company. Again, you'd expect it to have gone well. Short BA. I wouldn't go short BA because even before, obviously, the Russian invasion of Ukraine will have lifted defence companies, you'd have thought. The trend was up. I suppose, actually, you could take the view, a bit like on the Twitter trade I did, that the market's overreacted because of Russia's invasion, and BAE has jumped up a bit too much. So you could, if you wanted to go short, if I was short, I'd put my stop somewhere above 770. But for me, I'd be much happier buying a dip in BAE Systems. So yeah, for me, it's not a short because the trend is up. But let's see what happens. Right, everybody, we are going to have to wrap it up there till, it's not next week because it is going to be Easter. It's going to be 2 weeks' time, isn't it? What's our S&P trade doing? I think it's going to be losing money. Oh, it's making money. There you go, made 20 quid. 18 quid so far on that S&P trade. Let's have a look. I think it could be an interesting afternoon for stocks, US stocks, this afternoon, just to see if those old levels hold. Let's have a quick look. Yeah, it's early days, isn't it? Let's see. Let's see what happens with the S&P and the Nasdaq. I didn't trade the Nasdaq, but let's have a look if that area was holding on the Nasdaq. Oh, it has so far. Maybe we'll get a bit of a bounce today in the US. Let's see what happens. So to find out more, go to Capital.com. Any questions? Don't email me asking for financial advice because I don't have a crystal ball, obviously. But any questions about trading, drop me an email, david.jones@capital.com. On Twitter, I'm on @JonesTheMarkets. I run a training course, which you have to pay for. But there you go, nothing's free. And that's at jonesthemarkets.com. And you can follow Capital.com on YouTube, Twitter, and Facebook. Yes, have an early happy Easter to everybody. And we'll do it all again in 2 weeks' time. We will, of course, still be doing videos throughout the week, next week. So make sure you're subscribed for that. And that's it. Good luck with your trading and see you in a couple of weeks' time.